Hi, everyone. It's Jean Chatsky. I am with Mark Yeager. He is Director of Tax Development for TaxAct. Welcome.
Thank you. Good to be here.
It's nice to be here. It's important to be here, especially right now. We're 3 weeks and counting until tax day.
It's hard to believe. It's already this close.
I know. We get an extra bonus 2 days this year.
Right.
Right? If you haven't started, or if you have started but haven't finished, or if you are concerned that you might have done something wrong and you've got questions, we've got answers.
Yep.
We are here for the next 20, 25 minutes, or as long as your questions run in, to answer them. So join the chat, send us questions. I'll start with some of my own, beginning with, how did you get into this, and what is it that you do in your job?
Yeah, it's definitely a unique position, developing tax software, but I basically came from a 4-year school in Iowa in accounting, and I ultimately decided that I was going to get into taxes. And as I wanted to get into taxes, I moved into a company like TaxAct. So I just kind of worked my way through the ranks, and now I oversee a group of about 24 tax analysts that actually get into our software and update the tax code for the IRS and state changes on a year-to-year basis.
So every year when the IRS hands you a volume of changes, do you actually get a stack of papers the size of several phone books?
Yeah, they have thousands upon thousands of pages that they give us now. About 4 years ago, 5 years ago, we'd always print them off and read through it and highlight all the changes every year. But we decided we better stop doing that, and we just do it digitally now.
Saving trees.
Yes.
Excellent, excellent. All right, let me kick off with one of mine, but please jump in at any time. If you haven't started your tax return yet, give us the easiest way to go about it organizationally.
Right. So the main thing is organizing those documents you get throughout the year. So it's not even so much what you did these recently that you got, so your W-2 from your employer, or your 1099 interest statements that you get from the bank, or the 1098 mortgage statement that you get, because anymore you don't get those things passed through the mail. You get them digitally.
A lot of
to
them.
Sign in. That's correct. So it's getting those printed out or organized in some manner where you can at least write the information down when you actually get in the tax return to enter that information. Or the other thing that you get throughout the year, sometimes get statements, even all throughout 2017. So, of course, if you get child care expenses, your child care provider will provide you a statement for that information, but you might have received things earlier. So it's always important just to find one location where you can house all that information.
What I do is throughout the year, as I make a charitable gift, or I just have a folder with my accountant's name on it, or and I just put everything into the folder.
Right. Yeah, that's a great way to do it. Some people I've heard shoebox.
Yep.
They like to put things in a shoebox and just title it Taxes 2017. So whatever works for each individual person, as long as it's all in one place and you're not scrambling these last 3 weeks trying to find that information.
All right. The majority of Americans don't have to pay to file their taxes. They can do it for free. Can you tell us how to work this magic?
Right. So there's always the Free File Alliance that TaxAct is proud to be a part of, that we work in a partnership with the IRS to offer free federal taxes. But then we also, as part of what we do, is we can file some free federal taxes as well. So a lot of the times it's those simpler filers that you find that can actually complete their taxes for free. So it'd be, if I was a single person with just a W-2. And that's a majority of what our country is for tax filers. It's about 50%. So a lot of people will be able to just, if I have one single W-2 and that's really it, you can go in there, enter that information, and file your return for free.
Okay. Let's talk about the levels of help. I mean, I think people are largely aware at this point that using tax software is better than using pencil and paper because it saves you a lot of time, and because you're going to avoid the dumb math mistakes or the transposition of the Social Security numbers. When is software the way to go, and when do you actually need to hire a professional?
Well, my personal selfish opinion is anybody can do it themselves. So we believe in the DIY person. We believe in the DIY market, that any person can go in and file their taxes on their own. However, if you're a person that just too much is going on in your life that you can't even sit down and spend some time to get things organized or spend some time to jump on the computer and enter that information yourself, I'd argue that's probably a great time to let somebody else handle that, take that off your plate in your life, and let somebody else do it. Otherwise, if you're just in a very unique situation where you maybe had some unique situations happen in your life that have changed your tax life dramatically, that you're just completely confused about what to do next, that might be another situation as well.
Okay. I want to remind everybody that we are looking for your questions. So if you've got a tax question, Mark Yeager is the guy that you want answering it. Please take a sec, visit us in the chat, send us your questions. What are the biggest mistakes that you see people making every year, but in particular this year?
They try to rush through things. So it's all about getting their refund. Rightfully so. Everybody wants their money back that they gave to the IRS or even the states throughout the year. It's just an interest-free loan that they're getting, so they want to get that money back. However, sometimes they're in such a rush to get through and file their return, especially early in the year, that they just forget to wait for maybe another document that they forgot about that they were going to remember. So maybe somebody received a W-2 from their employer, but they forgot about this interest statement that they're going to get from their bank. So they file the return, get their refund, and then all of a sudden realize, whoops, I forgot that I had this interest statement, or I forgot I had this mortgage loan statement. And it's just kind of, then it becomes panic is, what do I do with this? How do I file a amended return?
Well, that's a good question. I mean, there's a lot of scenarios these days with so many income streams for so many people and so many documents where you get into the scenario where there's a mismatch, right? That's when you hear from the IRS, right, when what you report is not what they've gotten information on from employers and other sources. So what do you do if you did make a mistake or if you do get a document after the fact?
So the first thing I tell people all the time, don't panic. It'll be okay. The IRS, while they get this, opinion of them that they're very harsh and they want to come down on you, that is truly not the case. They really want to just get it right. So everybody's paying their fair share of taxes. So the first thing is don't panic.
Okay.
And the second thing is get that document. Make sure you print out your original return, because that's a lot of times needed to file an amended return, and then enter that information, whether you're doing it through tax software or you need to provide it to a tax professional, and then they can use that to file an amended return.
What are the biggest breaks that people leave on the table? What sort of credits and deductions? And I know that this is the entire point of tax software, that you write this code. I'm talking like I know technology,
right,
but
right.
You write this code in a way that takes us by the hand and asks us questions in English to help us figure out whether or not we're eligible for a particular deduction or credit or other break.
Right.
And yet people miss them all the time. Billions of dollars every year is foregone. So what are the biggies?
It's typically the little known things that companies or employers don't provide to you. So one of the situations I'd argue is moving expenses. So people don't always realize, if I move a distance of greater than 60 miles from your old job to your new job based off where you lived, and there's certain rules around it. But things like moving, you can actually get a tax deduction for, even as it relates to vehicle registration fees.
Huh.
So as you pay for that little sticker that shows up on your license plate that you need to get renewed every year with the state DMV, basically that is also tax deductible as an itemized deduction on your federal return.
I've also read a number of reports that educational deductions and credits are left untaken, and those are very valuable.
Very valuable. And part of the problem is Congress has been changing things on us as it relates to those tax deductions on a year-to-year basis. So for instance, here in February, they actually added back a tax deduction real late in the game. So some people actually didn't even realize that that's come back.
They added a deduction back for 2017?
That is correct. So in 2018, they made it retroactive to 2017.
Well, how do you guys keep up with this? I mean, if I did my taxes in January, if my employer was really fast with the paperwork, I know a lot of them aren't, but if I was fast to the party, I might have missed that.
Right.
Would that trigger an amended return? Should I file one? How do I know?
Yes, and the main one that we've really seen is the mortgage insurance premiums that get reported on 1098 from a bank. So that was part of that package that changed in February. So really, the first thing we need to do is get the software updated and make sure that that's actually doing what it's meant to do now that the law's passed and signed by President Trump. After that, we really need to send out email messaging to our customers to make sure that they understand, hey, there's this new, they call it tax extenders, there's this new tax extenders break that's possible to start claiming these deductions, even though they may have already filed in, say, late January.
We have questions from some of our viewers. Thank you for those questions. Keep them coming in. We really like them. Amy wants to know, if I file an extension, does that mean I have more time to pay my tax bill?
No, that is one of the things that's actually always forgotten about with people. They think, oh, if I just file an extension, I just have till October 15th now to pay my tax liability. That is absolutely not the case.
And the penalties for not filing are bigger than not paying, but there are penalties for both,
There
right?
are, yeah, and that's set by the IRS comes out with their 2210 form that sets the interest and penalties for filing late. But yes, you absolutely have to pay what you expect to owe by April 17th. All the extension does is allow you to ultimately shore up what through paperwork or through that 1040 form what your financial situation looked like for the year.
I always feel like that's a little bit of a catch-22 because you're expected to pay what you're expected to owe, but you don't know how much you have to owe until you do your taxes. So how do you ballpark an amount that the IRS is not going to penalize you for?
Right. So for the most part, the easiest thing to do is pay 90% of what your tax liability was the previous year. So
And
as long as you
that'll
pay
be safe?
90%, then you're safe for the next tax season.
Okay.
Correct.
One more from our viewers before we come back to my questions. Sean wants to know, what if I need to file the past year's tax return? Sean missed a year.
Yes, you can do that. They pretty much allow you to claim or to file a tax return to claim a refund for up to 3 years. So really, there's tax software out there that you can use that you can go back into prior year returns. Again, very similar to 2017. Get all that information organized, and then start completing your either 2016, 2015, and 2014 tax return.
If you are due a refund, you won't be penalized.
That is correct. Yep. So extension filing really only matters for those people who owe. So if you're expected to get a refund, filing an extension really doesn't do you any good. Filing an extension is the main reason for doing it is just to make that payment of what you expect to owe for that year.
They're not going to penalize you if they have nothing to penalize, right?
Yep, they already have their money, and they're holding on to the money that they owe you. So they're all for it. They'll hold on to the money that they owe you for as long as they can.
Okay, really great questions, guys, so keep them coming. Let's talk a little about freelancers and self-employed workers and the gig economy,
Yes.
because it is such a growing sector
Right.
of our workforce these days. What do people who fall into this bucket need to know?
So while we always say you still got to get organized, the main thing is always never assume that something you pay is not deductible. It's better safe to say, all right, I had this business expense. I'd rather just err on the side that I should collect it, I should save that information, assume it's deductible, and then ultimately figure out whether you can or cannot deduct that information. Because you don't want to be on the opposite end where, I have this meal receipt. I don't really know if I can deduct it or not. I threw it away, and now it's too late to ultimately come back and have record of that receipt that you had.
A lot of these records today are on credit card slips,
That's
debit
true.
card slips. Do those suffice for the IRS?
It does. There's enough information on that credit card slip because usually they'll always say the name of the restaurant you went to and the amount of that, on that receipt or on that credit card statement that tells you it's deductible.
Venmo.
I would assume that that's the same as well. I can't say that with 100% certainty, but that should work as well.
Yeah, I mean, with all the new ways that we're paying each other these days, I bet that the IRS sooner or later issues some guidance about
Right.
that. I would expect to see it. All right, we know that this year is complicated enough, but next year is a big ball of wax
Right.
because we've got a new tax law, we've got a lot of changes in the mortgage deduction, changes in state and local income taxes and whether they're deductible, a lot of changes. I could sit here and list them and it would take me all day. So what do we need to know about planning for next year now?
Yeah, so the things I always talk about, it's while there's a lot of changes to the tax code for next year that, like we talked about, the state and local income taxes are changing for next year, the standard deduction amount's changing for next year. But in terms of entering all that information, we really want that experience to be the same. So just like it was in prior years, you still want to go in and enter your mortgage interest. You still want to go in and enter your real estate taxes. And you'll still go in on your W-2s and your state withholdings and things of that nature. And leave it to the software to determine how much is deductible or not deductible. Now, with that, they issue new W-4s. Employers just kind of did it here in late January, middle of January, where people's paychecks started to change.
Let's talk about that
Yes.
because there is an issue there for a lot of people.
Right. So it's important for them to go in there now, start figuring out, okay, if this maintains, so you can look back at old pay stubs, you can look at your payroll software that certain companies may have. And then ultimately, there's tax calculators for 2018 that are out there. So you can enter that information. How am I doing? If I expect to make this much income and I expect to have this much in tax withholdings, using those tax calculators, we can get an idea of whether or not we may owe or we may get a refund for next year. And if we're finding out that we are underpaying, then we really should file a new W-4 to have a little bit more withheld.
Well, and we should do it sooner rather than later, right? Because the longer you allow the scenario to persist, the bigger the hole you're digging for yourself, right? The more you'll owe.
Absolutely correct. Yeah, you don't want to wait until November to realize that you've paid in $2,000 short. So you're going to try to find a way to make a $2,000 payment at that time. It's much easier to do it now and space out those payments to get caught back up to where you need be to avoid interest and penalties.
How about the flip side? How about people, are there people out there for whom the changes mean they will be over withholding rather than under withholding?
That is very much possible. It really depends on each and every person's unique tax life. That's what I always refer to it as their tax life. Yep. So as changes happen in their life that ultimately affect their tax situation, it could ultimately bump them to having another child. It could bump them into a category of receiving more money than they were originally planned for. So it's important to know that too, because if you're trying to be financially savvy, you don't want the IRS in the states to be holding on to as much money that's rightfully yours at a 0% loan. You would rather have that and use it for whatever purpose it may be, as if you have another child, getting ready for diapers and things of that nature, or even investing it in stocks.
I always hear that. And I totally agree with you. I think giving the government an interest-free loan is not a good idea. And yet I know, and I know you know, there are a lot of people who don't save regularly. And this is a form of forced saving that actually works for people. Right. So in that scenario, do you object?
I don't. If that's what people want to do, if that's what makes the most sense for them to find a way to save up some money, whether it's if they have a goal in mind, their goal is to go to Jamaica, or their goal is to buy a new TV. If that's the best way for them to go about doing it, knowing that if they did take the money out, they wouldn't spend it the way they want to, what they want to spend it for. So in that case, to each their own. Whatever makes sense for you or whatever makes sense for your life, that's what you should do.
Okay. All right. Let me just remind everybody, with the few minutes that we have left, we are still taking some of your questions. We are happy to do that. Okay. Let's deal with the question that people really don't like to come up against, which is you owe money and you don't have it.
Right.
What are your options?
So there's a few options. One of those options that I always try to stress first, see if there's a way you can talk to a parent. See if there's a way to talk to a sibling or talk to a friend that might be able to loan you the money. There's complications of that. It's never always good to loan money from a friend or to loan money from family, because that could kind of put a little barrier in the way into the relationship. But outside of that, the next best option, there could be a bank loan that you go to get. Or the one thing that I always recommend is the IRS has what we call an installment loan agreement request, which is filed on this form called Form 9465. It can actually be e-filed with the return to make it as simple as possible. And it allows you to pretty much set up a monthly payment request with the IRS. Of course, they have to approve it, but it is a good way to say, hey, this is what I'm capable of paying. I can pay back $50 a month. And then the IRS will do what they can to help meet that plan.
Well, and generally, if you owe less than $10,000, they will approve it, correct?
Yes. Yes.
You don't have to worry about that.
Correct. Yes, that's very true.
If you were to weigh doing that, going on a payment plan versus putting it on a credit card, how do you shake out there?
That's true. I mean, if you can't pay it back within a certain period of time, it just depends what that credit card interest rate is, which, a lot of times it's probably in that 18 to 22%, and the IRS loan interest rate amount will be a lot less than that. So if you think you can pay it off within a month to 2 months, maybe the credit card is the right way to go. But, ultimately, if it's going to be anything outside of a longer period of time, outside of, say, 3 months, you should look into setting up an agreement request with the IRS.
Okay, we have a question from John, and John writes, I do freelance graphic design work. Do you have any filing advice for me? And he also wants to know, what's a popular deduction for me?
For graphic design work?
Yep.
Yeah, so a lot of times it's a software tools that you use in graphic design that you really want to keep track of and expense those items. Now, you're also dealing with, you might have to do some travel. So as part of that, where you might have to travel to one company or travel to another company. So that travel, there's kind of a couple ways to look at this. There's certain travel expenses that are fully deductible. So your flight, your hotel stay.
Yep.
But your meals, if you go to travel to a company and do work for them as a freelancer, if there's need for travel, then you would want to, it's 50% deductible. Now for those who don't travel, and they stay at home, there's a business use of your home deduction that you should ultimately use, where you really need to square off a portion of your home that's specifically and only used for business. Now the IRS does give a standard deduction of about 300 square feet, where you don't have to do any of the calculations by keeping track of utilities and things of that nature. But if it is bigger than 300 square foot, it's going to be important to keep track of even your utilities if you take that deduction.
That's exactly where I was going to go, actually. But a lot of people get nervous about taking that deduction, that it's a red flag for an audit. Is it anymore?
It's hard to say if it is anymore, but it has been a popular one. Now, the key there is it's got to be specifically and only used for business. And I think that's part of why the IRS came out with a standard deduction allowance of up to 300 square feet at $5 a square foot. So it makes it easier to not have to keep track of all that information on a year-to-year basis.
Yeah.
And you really just take the standard deduction amount and you'll be fine.
Well, and that's $1,500, so it's not negligible.
Correct.
All right. David writes, I'm self-employed and I need to file an extension. What's the deadline for me to make my IRA contribution, and what is the maximum contribution I can make?
That is a great question.
Love that question.
So,
Thank you, David.
April 17th is the last time, or the last date that you have to make that traditional IRA contribution to count as a deduction for the current year that you're in. Mm-hmm. And in terms of the maximum contribution amount, it will depend on each person's tax scenario, but it's typically up to $5,500. Now, I believe it's if you're over the age of 50,
Yes.
It's going to be $6,500.
Like me.
I don't believe it.
Thank you for saying that. One more from our crowd. Sean wants to know, what if I work for myself? Does TaxAct software work for my situation?
Oh, of course, yes. And what's great about the TaxAct software is we do have a unique product line that's called our Freelancer Edition. And we actually have videos in our product that help you walk through up to 10 different professions for this year to help you walk through all the expenses that you can claim.
Okay. And as we get to the point where we need to wrap it up here, I think I just want to know, as you're pulling together your top 3 tips for people who may be a little bit nervous, maybe a little bit wary of taxes in general, what do you tell them? Because I'm sure these are the kinds of things that your neighbors and your friends ask you all the time.
So the first thing, I'm here on camera too, doing this Facebook Live interview with you all. Be confident. It's always scary doing something new, or it's always scary dealing with your finances, but there's nothing to be scared of. You have friends and family that are always there to help you as well as working with the software company that you have and the support that they provide. It's the number one thing. Number 2, like we talked about, is just all you have to do is be organized. As long as you're organized, pretty much if all those documents are one place, it's really simple to go through and file that tax return. And then 3, at the end of the day, it's all going to be okay. Everything's going to be okay. The IRS, they're not here to punish you. They're not going to throw you in jail should something go wrong. it's all about just entering your information, understanding your tax life, and moving forward from there.
And where do you send people who need help?
So we have a taxpayer support group that actually takes phone calls, does live chat. We also have social media where we'll answer some questions as well.
So I can tweet you?
You can tweet me. Yes, you can tweet me. And actually, it's a funny story. I actually started in taxpayer support. So I just remember all the people that we help, and it's very enriching, very rewarding to help those folks.
They send you cookies?
They want to send cookies. They want to send other things too. So it's definitely, they're very grateful, and we really do what we can to help them out.
Okay. Mark Yeager, thank you so much. This has really been informative and terrific, and we both hope that you all have lots of luck finishing up your taxes. Thank you.
Thank you.